Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. This will be the last one of the week. It is December 5th, Thursday. We do these Monday through Thursday whenever the market's open. We will be taking a look at TD Bank. This is out of the financial sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Click that notification bell so you're notified whenever we put out any new content. And if you'd like to buy me a cup of coffee, there is the thanks button down below as well. A special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. This is the Vested Interest Stock Screener. This is the criteria we will be going through at the end of the video, well, during the video, and then checking how it stacks up at the end of the video. Since it is a bank, we will be looking at price to book, so it must meet 6 of 9 to make it onto my watch list. And just because it makes it onto my watch list, that does not mean I'm investing. That means I'm interested in doing more of a deep dive into the company's financials, looking at their balance sheet, their income statement, stuff like debt to equity ratios. Are their margins growing over time? Is their revenue expanding? Are they buying back shares or diluting you as a shareholder and issuing more shares? Are they paying down debt? Price to book, PEG ratios, a lot of good information in their financial statements. And if you don't know how to read those, you might want to just stick to the S&P 500, buying an index fund or ETF like VOO that tracks the S&P 500. That is what Warren Buffett would recommend. Now, back to TD Bank. You can check them out on their homepage, www.td.com. That is www.td.com. That is their homepage where I pulled this information from. And they are a bank. If you've used a bank, you're well aware of the products that they provide. Checking accounts, mortgage options, if you need to buy a home, investment and trading. Most banks now have an investment arm on it, right? Whether it's through another company that you can access, or like my bank, Ally, where I just log into my regular savings and checking account and I do all of my trading through Ally as well. Savings account, personal investing, right? That's the same thing we just talked about. Wealth advice, you might be able to call and get a personal wealth plan if you want to use them that way. Credit cards, borrowing, obviously, if you need money for a car or something like that. And then you can check out today's rates. Again, check them out on their homepage, www.td.com. I will say, this is a Canadian bank. I'm an American. So there are some tax implications for me as an American, right? My brokerage takes the taxes out whenever dividends are paid. If you are an American and you have foreign companies, even if they're Canadian or Mexican or wherever they are from, if your brokerage account does not take out the taxes when they pay the dividends, then you will be responsible for that at tax time. So you need to understand how that is done by your brokerage account. If you want more tax information, you need to talk to a tax advisor. I am not your tax advisor. Now, the reason we are taking a look at them, down 6.73% on the day, big drop on the day, closed out the day at $52.79. We are talking about the Toronto Dominion Bank, ticker TD, out of the financial sector. Again, this is a Canadian company. 52-week range as low as $52.75. So they are right up against their 52-week low, as high as $65.12. Looks like they're up a little bit in the after hours. Market cap of $92.481 billion, a beta of 0.82. So even though they look pretty volatile throughout the day, overall they are less volatile than the overall market. PE ratio at $17.20 per share, which we don't really look at price to earnings for banks. We look at price to book. That's over here. We'll look at that in a second. EPS, earnings per share, sitting at $3.07 per share. Earnings date was today. So if you want to know what's going on with their earnings, you should check that out. And I'm assuming that something in the earnings report the market did not like, whether they missed their top or bottom lines, whether their future projections were lowered, whatever the earnings report issued today resulted in a 6.73% drop. Forward dividend is $2.93 per share. Divided by 4, they are a quarterly payer. Very nice starting dividend yield on this one of 5.18%. Ex-dividend date, the last one was October 10th. I believe they'll have another one coming up in January. Their dividend was paid out on October 31st. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one of the sources I go to for information. $86.18. So they actually see it setting a new 52-week high, right? Now, jumping over to the right here, we're going to look at dividend yield theory. I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation. It's just one metric. It's not the end-all, be-all. And to do that, we look at their 5-year dividend yield average of 4.35%. We compare it to the current 5.18%, or over here where it says forward, 5.18%, same number. And since it is higher than their 5-year average, that speaks to undervaluation. at least according to dividend yield theory. Now, I do look at payout ratio as well. I like under 75%, and they're looking at 93.06%. So that's above the 75% that I'm looking for there. So they will not get a check there, and I'd like them to bring that down. That starts to concern me when you get into the 90+% range, unless you're looking at REITs or business development companies that typically pay out more than 90%. A bank should be under this, at least in my opinion. Price to book, because it's a bank, we're going to take a look, right? Their current price to book is 1.38 for banks. I use 1 as fair value. So they are still slightly above that fair value mark as far as I'm concerned for price to book. But you can see over the last year and a quarter or so, a year and a half almost, this is one of the lower times for their price to book, right? So 1.52 would be higher. That would have been more expensive back here in July. Was a little bit cheaper here in October of last year in 2023, but more expensive here in January 2024, more expensive in April as well. And then most recently, even in July here in 2024, they were more expensive at 1.41. So they are trending towards that 1 at fair value, but you really want them under a 1 price to book for banks, at least in my opinion. Dropping down, we're going to look at free cash flow. I want growing free cash flow over time, because typically if a company has growing free cash flow, they can raise that dividend as well. They can also pay down debt, make acquisitions, reinvest back into the company, and buy back shares. As you can see here, going back to October 2021, 49 billion in free cash flow. 2022 down to 37 billion. 2023 even further down, negative 67 billion. And the trailing 12 months looks like negative again at 12.2 billion, but they are repurchasing shares. 2021 had them at 11.7 billion repurchased shares. 2022 was up slightly to 14 billion, but that does not quite account for the drop in free cash flow. So I will say that has been a decrease there, getting better in the trailing 12 months, but still not negative is not good. 2023 negative 13, more shares bought, 13.2 billion, and then the trailing 12 months they're continuing that trend at 19.3 billion repurchased shares. Jumping over to stockanalysis.com, this is just another source I go to for information. I am not affiliated with this one either. Now I will point out this price target was last updated on May 24th, so this is well outdated, and that is part of the reason I recommend more than one source for information. Sometimes the information you are looking at is outdated, sometimes it's just wrong. So 2, if not 3 sources I would recommend for you to be looking at information to make sure you're getting the accurate and up-to-date information. They do have one analyst, and actually I looked at this whenever you go to their website and you click on each one of these, you'd be able to tell how many call it a strong sell, a hold, a buy, or a strong buy. There were actually 2 analysts that call it a hold. Right now I know it says 1, but when you click on this, it shows 2, and then whenever you go down lower, it'll tell you who those 2 are. They do have a low estimate at $84. That's pretty close to what we saw with Yahoo Finance's 1-year estimate at 85, which would represent a 59.09% increase. Average estimate, same thing at 84, 59.09, and high estimate of 84 at 59.09. All the while, you can collect that 5% dividend yield as long as they maintain it, right? Getting up in the 90%, 93% range, that starts to concern me. They're a little over leveraged with their free cash flow payout, or their dividend payout, which is coming from free cash flow. Now, I'd like to look at statistics and look at return on equity and return on invested capital. That tells me how well the company reinvests back into itself. Return on equity, ROE, I like 10% or better. They're sitting at 7.78, so they're not quite there. Return on invested capital, ROIC, was not listed, so we can't look at that. So no check for them there. Earnings per share growth was not listed as well. I like 5% or better forecasted over the next 5 years. Can't give them that one. And revenue growth, I just throw in. This usually is more of a deep dive look, but I like to throw it in here anyway. Wasn't available either. So let's wrap this one up before we get back to the screener and see how it shakes out. Quarterly payout ratio, they're saying 94.85. Either way, it's above the 75% I'm looking for. 93, 94% is getting up there. Dividend growth is at 5.77%, so they are growing their dividend. That makes me wonder, should they be doing that with such a high payout ratio? 8 years of growth, buyback yield is positive at 2.81%, shareholder yield is positive at 8.39%. You want to see positive buyback yield and shareholder yield, at least in my opinion. Now, they do pay out on the off months, January, April, July, October. So this is a non-typical payout month schedule, so I do like that. April 2022 here, you can see they're paying 71 cents. And some of this is going to fluctuate based on monetary rates, right? They kind of fluctuate over time. The dollar and the Canadian dollar have different swap rates at different times. You know, the dollar might be worth more, the Canadian dollar might be worth more at times, not more, but might be closer tied to the dollar at times. So that's going to fluctuate. So some of this fluctuation is based on the exchange rate. Sorry, I was looking for that. The exchange rate of money here. July 2022, 0.68, so 68 cents. October 6, 2022, 65 cents. January 5th, 2023, 71 cents. April 2023, 71 cents and some fractions of a penny. July 2023, 71, down to 69 cents. So again, I'm assuming that's because of the exchange rate drop. October 2023, 69 cents. January 2024, 76 cents. April 2024, 75. July 2024, 74, and October 74 as well. But you'd have to go back and look at the exchange rate on each one of these dates to see how much of that is the dividends adjusted versus the exchange rate was adjusted. All right, let's look at the screener and wrap this one up here. Understand the business. That's what we started. They're a bank. They offer the same thing most banks do. Growing free cash flow? No. They're up and down. Growing dividend? Yes. But I question whether or not they should be growing that dividend. Dividend ratio is over 90%, so no check there. Valuation based on dividend yield theory? Yes. Dividend yield theory says they're potentially undervalued, unlike price to book. Buy below current cost basis. It actually is within 15% of a 52-week low, so that should be a check there. ROIC and ROE equal to or greater than the industry average, 10%. They didn't have anything, either one of those, or neither one of those was above 10%, so no check there. Earnings per share growth was not listed, so no check there. And price to book was over 1, so no check there. We missed the 15% of 52-week low, so that would be 1, 2, 3, 4. It does not meet 6 of 9. It does not quite make it onto my watch list. Let me know what you think of Toronto Dominion Bank in the comment section down below. Is it one you're watching? Is it one you're investing in? Is it in your portfolio? Or are you part of the 6% downturn and maybe you were selling today? Well, that is it. I always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to this channel. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So drop a comment down below. Ask any questions that you like, or if you have a company you'd like me to cover in the Stock Pick of the Day series in the future, drop it down there. I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.